Welcome back to Wealthblueprint716. I'm your host, Alfredo Shell, and friends, buckle up. On April 2nd, 2025, the ghost of protectionism reared its ugly head once again. President Trump, in a move that surprised absolutely nobody, announced a new wave of tariffs. These tariffs target imports from almost every country on Earth. That's right, folks. We're talking about a 10% tax on everything from Chinese electronics to French cheese. Now, the stated goal of these tariffs, as always, is to protect American jobs and boost domestic manufacturing. But history tells a different story. Remember the trade war with China? Yeah, that didn't exactly go as planned. Spoiler alert. It hurt American businesses and consumers more than it helped. These new tariffs are like a rerun of a bad reality TV show. We've seen this episode before and we know how it ends. It's a recipe for higher prices, fewer choices, and a whole lot of economic uncertainty. The markets, as you might expect, reacted to the news of the tariffs like a bunch of pigeons startled by a loud noise. Stock futures plummeted, the dollar took a nosedive, and investors ran for cover like roaches scattering when you flip on the kitchen light. Not exactly a vote of confidence in the future of the American economy, and who can blame them? Experts are predicting a whole smorgasbord of economic indigestion. Economists are forecasting a slowdown in growth, a surge in inflation, and a potential recession. And let's not forget about the possibility of a full-blown global trade war, which would make the whole situation about as pleasant as a root canal without anesthesia. The real kicker? These tariffs are going to hit lower-income households the hardest. We're talking about families already struggling to make ends meet being forced to pay even more for basic necessities. It's like robbing the piggy bank of a kid who's saving up for their first bike. Let's break down the human cost of these tariffs, shall we? Imagine you're a single parent working 2 jobs to put food on the table. Now imagine that the price of groceries, gas, and clothes just went up. That's the reality facing millions of Americans thanks to these tariffs. And it's not just about higher prices. These tariffs are also putting American jobs at risk. When businesses have to pay more for raw materials and imported goods, they have 2 choices: raise prices or cut costs. And guess which option usually involves laying off workers? So, while the Trump administration is busy patting itself on the back for supposedly protecting American jobs, the reality is that these tariffs are hurting the very people they claim to be helping. It's like trying to put out a fire with gasoline. So what's an investor to do in these uncertain times? Well, the first rule of investing is don't panic. The second rule, seriously, don't panic. Freaking out is about as helpful as a screen door on a submarine. Instead, focus on long-term strategies. Diversify your portfolio, consider investing in inflation hedges like real estate or commodities, and buckle up for some market volatility. It's going to be a bumpy ride, folks. Remember, the market has weathered storms before, and it will weather this one too. The key is to stay informed, stay calm, and don't make any rash decisions. And if all else fails, you can always stock up on ramen noodles and canned goods. They'll be worth their weight in gold if this trade war really heats up.